Today, we are tearing down Marvell Technology. It's a name you probably recognize, but I'm willing to bet the company you think it is doesn't exist anymore. Its transformation into a key player in AI infrastructure is one of the most fascinating and honestly misunderstood stories out there right now. Let's get into it. So, we have to start with the most basic question of all. What exactly is Marvell today? Because the answer that probably pops into your head is, well, it's likely about a decade out of date. And let's just get this out of the way immediately. If you still think of Marvell as that company that just makes storage controllers, it is time to hit the reset button on that idea. That company has been completely rebuilt from the ground up. And look, this slide right here, this tells you pretty much the entire story in one powerful number. For fiscal 2026, a staggering 74% of Marvell's revenue came from the data center. This isn't just some growing part of their business. It is the company now. Everything else is basically a sideshow. Okay, so here's our new working definition. This is the Marvell we're talking about today. It's a data infrastructure semiconductor company. And its value, its whole reason for being, is now completely tied to the most complex, high-stakes parts of AI and cloud systems. We're talking custom silicon, the optical tech that moves mountains of data, and the switching that holds it all together. So how are we going to prove this out? Well, here's the plan. First, we're going to look at how this new AI platform was actually built. Then, we'll unpack the 3 layers of their business model. After that, we are going to decode the financials. And finally, we'll boil it all down to the core investment thesis. All right, let's dive right into section 1, the Murphy-era transformation. This is the story of how a kinda sleepy legacy company was strategically rebuilt piece by piece for the age of AI. You know, when you lay it out like this, it is truly a masterclass in corporate strategy. It all kicks off in 2016 when CEO Matt Murphy starts this deliberate pivot to data infrastructure. The Cavium deal in 2018 added some serious muscle. But the real game changer was 2021, buying Inphi and Innovium. That's when they got the keys to the kingdom for optical and switching. Then they just doubled down, selling off other stuff and buying up specialists in AI fabric. This wasn't random. This was the deliberate construction of an AI powerhouse. So the takeaway is simple, but so important. The Marvell we see today didn't just happen. It was built. It's an M&A construction designed piece by piece to go after the massive AI data center opportunity. Okay, so that's how they rebuilt the company. Now for section 2, let's look at how it all actually works. We can break down how Marvell makes money into what we're going to call the 3 economic layers. The top layer is custom compute. This is where Marvell designs these highly specialized, custom-built chips, they're called ASICs, for the biggest AI programs on the planet. The second layer, though, connectivity and optical, this is where the real action is. See, as AI models get bigger and bigger, the number one problem is just moving all that data around. Marvell sells the super high-speed plumbing that solves that exact problem. And finally, you've got the legacy infrastructure business, which gives them a nice, stable foundation and a ton of engineering talent. And all of these layers work together to create this really powerful flywheel. It starts with Marvell building unique technology that helps them win a massive custom chip deal. But once they're inside a customer's system, they can start selling more stuff, like their optical links and their switches. That creates this really sticky, long-term revenue stream, which they can then pour back into designing the next big thing. Winning a custom deal isn't just one sale, it's a beachhead for the entire company. So the key thing to remember here is that Marvell isn't just selling chips anymore. They're selling performance. They use these huge custom deals to get their foot in the door, and then they monetize the single biggest bottleneck in AI, moving data. All right, now for section 3, and this is where we follow the money, decoding the financials. Because to really get what's going on with Marvell, you have to look past the shiny headline numbers and see the real story they're telling. And that story starts with a very impressive number. For fiscal 2026, Marvell's looking at bringing in nearly $8.2 billion. I mean, on the surface, that looks fantastic, incredibly strong. But as you know, the headline is never the whole story. The real story here, and frankly, the real risk, comes down to one word: concentration. And wow, this chart just lays it all out there. An absolutely mind-boggling 82% of all their revenue comes from just 10 customers. And if you look even closer, one single distributor accounts for almost 40% of their business. This isn't just concentration. It's a business built on a handful of very, very important relationships. Now, this concentration risk leads to a bunch of potential traps for anyone trying to analyze this company. You can see them here. There are issues with how they report their income, how they hide the real costs of all those acquisitions, and we still don't really know how profitable their big custom deals are. They also don't break out their business into different segments, so it's all one big black box. Put it all together, and it means that while the growth story is really exciting, the financial picture underneath is a lot murkier than you think. So, in short, the top-line growth is incredible, no doubt about it. But the financial foundation has some pretty significant risks tied to that extreme customer concentration and a real lack of transparency that you just have to acknowledge. Okay, so that brings us to our final section where we put it all together, the core investment thesis. When you buy Marvell stock, what are you actually really betting on? Well, the whole debate really comes down to this. The bull case, the optimistic view, is that Marvell's big custom AI wins are sticky. They're long-term, and they'll be able to sell more and more of that high-margin optical and switching gear into every system. The bear case, though, is that Marvell is just a temporary pass-through for a huge AI spending spree, and that those huge customers will eventually squeeze their margins down to nothing. Ultimately, it all boils down to this single idea right here. Investing in Marvell is a bet that the future of AI infrastructure is going to be way more custom, way more dependent on high-speed optics, and just fundamentally more complex than anyone used to think. If that's the future we're heading for, Marvell is in a perfect spot. If it's not, well then all those risks we just talked about become very, very real. And that is the central question you have to answer.